Hello traders and welcome to another video review. Today is Monday, December 1st, 2025. Let's take a look at the Forex economic calendar for today. What do we have here on Monday morning and the beginning of the new trading week? Capital spending data in Japan down from 7.6 to 2.9. In Australia, company gross operating profits up from minus 2.6% to 0%. Caixin manufacturing PMI data from China down from 50.6 to 49.9. German BUBA President Joachim Nagel gave a speech at 5 o'clock. S&P global manufacturing data in Russian Federation up from 48 to 48.3. You are still waiting for the retail sales data in Switzerland, and then we got all of this manufacturing PMI data from across the Eurozone: Spain, Switzerland, Italy, France and Germany. At 10 o'clock we got the GDP data from Poland, and at 10 o'clock we got the Eurozone manufacturing PMI. 30 minutes later, S&P global manufacturing PMI data from UK are scheduled for release, and then of course we got data from the US in form of the global manufacturing PMI data. This one is scheduled for release at 3:45, and Chicago PMI is scheduled 3:45. At 4 o'clock we got ISM manufacturing PMI data, the major event of the US session. Atlanta Fed GDP now is scheduled for release at 7 o'clock, and that's about it for today. So without any further ado, let's switch to the charts. We start with euro dollar. The beginning of the new trading week and last trading month of 2025, euro dollar starts with a higher note. The market keeps this movement above the trend line, as you can see. If we lower the trend line here, you can see the first bounce and the second bounce from the trend line. So it looks like the bulls are still trying to move higher. Local technical resistance is located at this level here, 1.1616. So we can say that any breakout above this level is bullish. Momentum is strong. Momentum is positive, so the bulls are in charge of the market. We should see further weakening of the dollar and the rise of the euro dollar towards 1.1657, which is only 30 pips away. That was the euro dollar. What about the British pound? The British pound keeps attacking the technical resistance. Nevertheless, there is no progress and the momentum keeps moving lower. The market is locked between a very narrow range here. Local high, let me just place this high here on this chart. Local high is 1.3267, that's the local high, and the local low is roughly 1.32, so that's 67 pips zone. And the British pound doesn't actually do anything about it, just moving sideways. It's been moving sideways for the half of the last week. It's been moving sideways at the beginning of the new trading week. However, it's quite close to the middle of this range, to be honest. Yes, to the middle of this range. So the British pound in the middle of the range. Now, US dollar versus the Japanese yen looking bearish finally. Why finally? Because we've been waiting for this market to cover this gap, and it looks like this market doesn't want to go higher, especially after we got this situation on the chart. Yeah, for our time frame chart, we go down, up, down and up, down and up, lower lower low, lower high, lower low, lower high, and finally we expected this to be some kind of a maybe even a triangle, and then we will break to the upside right after the triangle. Nevertheless, nothing like this happened, and we got a breakout below this local technical support, just a local one, 155.74, and we are testing 100 periods moving average, which is 155.48. Momentum is negative, but it's still above the extremely oversold conditions. So I guess if euro dollar goes up, then US dollar versus the Japanese yen might drop towards this technical level, 154.50. Alright, so please be prepared for this kind of a situation. We are changing this color to red now. This is the technical resistance. US dollar versus the Japanese yen, bearish bias. How about the gold? Well, because the dollar is weakening across the board, the gold is moving higher. We just recently broke above the 4,244 technical resistance and last swing high, and now the market wants to move up again. Now this is the old level, we don't need it anymore. That level here that used to be technical resistance doesn't actually looks pretty solid to me anymore. I think that this level here might be a better value, technical support 4,132. Now the gold looking bullish, strong momentum, however too strong for the current market conditions because we hit extremely overbought conditions. Now it's still slightly below the level of 70, so the market keeps moving higher. The next stop with that kind of a momentum is obviously the swing high from the, let's say, October 21st, right? And this is of course $4,374. So gold is very, very close to the recent highs. S&P 500 at the beginning of the new trading week and the last trading month of 2025 doesn't do much. We just broke above the trend line, then we go back below it, and we are still waiting for this level here, 6,770, to be tested. Because it's a technical support. Moreover, on a 4-hour time frame chart, the market hit the extremely overbought conditions and now is at the level of 54. So let me just place a neutral line here. So we know that the neutral line, let's say this is the line. We are very, very close to hit this neutral line. Nevertheless, the momentum is still positive. It's not that strong, but it's still positive. But with this price action, we might see further movement lower, and then we will see whether this breakout here was only some sort of the fake breakout, or maybe that was just basically just the beginning of the test of the trend line, test of the technical support, and then further movement to the upside. Last but not least, we are talking about the Bitcoin. The recent drop to the downside was completely unexpected. We moved out of this this range here, the weekend range. Volatility was obviously low. Nevertheless, we tested the 100 periods moving average, went into the consolidation, and we broke below the technical support. Now this level will be the technical resistance, $90,000. Big breakout to the downside, local low. Let me just place the line for the local low, so we know what is this local low, 85,604. So it's like in the middle of nowhere. Nevertheless, we got some extremely oversold conditions already hit here, so we can only get better from here. But there is no guarantee, obviously, for anything like this. Now, if we place, let me just remove the magnet. If we place Fibonacci retracement level, all right, from the lows to the highs, so we could clearly see we retrace almost 61%, right? The 61% is roughly like $300 below. So if there is no new low, this is the deepest retracement we can approve, and then still say that the market can go higher. Any breakout below 85,330 is bearish, basically. So please keep an eye on the current situation, whether the bulls will have enough momentum to move this market higher, bounce from the extremely oversold conditions towards the level of 50, and then higher. The outlook remains a little bit bullish because this is the highest the highest correction to the upside during the downtrend, and this is quite deep retracement. Nevertheless, it's still possible for the Bitcoin to resume this movement to the upside. If there is no resumption, then sooner or later lows of 80,000 will be hit. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.